The era of the digital Wild West has officially ended in the North. For over a decade, a silent agreement existed between global streaming giants and the Canadian border, a look the other way policy that allowed Silicon Valley to extract billions in revenue without ever playing by the local rules. But a quiet legislative pivot has just triggered a systemic collapse of that old strategy. This isn't just about a price hike or a library update. It is the fundamental restructuring of how culture is commodified in the digital age. While the headlines focus on subscription costs, the real story is a massive geopolitical reclamation of digital sovereignty. Canada has effectively erected a digital border wall, forcing a trillion-dollar entity to submit to the same gravity that governs traditional broadcasters. The world is watching because this is the first successful attempt by a mid-sized economy to break the platform exception. For years, Netflix operated as a ghost in the machine, a service that was everywhere but legally nowhere. Now, the mask of the tech platform has been stripped away, revealing what these companies actually are, the world's most powerful media conglomerates. This event represents a shift from globalist expansion to digital protectionism, marking the moment when the internet ceased to be a borderless utopia and became a collection of regulated territories. The implications for your screen and your wallet are immediate, but the reason this happened now involves a calculated gamble that could backfire on the entire industry. We are witnessing the first cracks in the ideology of borderless data. For years, the prevailing wisdom was that the internet was too fast, too fluid, and too decentralized for any single nation to contain. Silicon Valley built its empires on this premise, operating under the assumption that if they moved fast enough, the laws of the physical world would never catch up. But the physical world has finally caught up. By reclassifying streamers as broadcasters, the state has essentially reached into the cloud and pulled these platforms down to earth. This represents a seismic shift in how we perceive digital property. It is an admission that the digital space is not a neutral void, but a contested territory where the rules of the local land apply. The global reaction has been a mixture of shock and quiet admiration from other regulatory bodies, as Canada has provided a legal template for digital reciprocity. This is the moment where the free ride for global tech ends and the era of the nationalized internet begins. The world is reacting because if Canada can successfully force a giant to pivot its global strategy, then no platform is truly above the law. This event is the opening salvo in a new kind of trade war, one where the currency isn't oil or steel, but the very algorithms that decide what you see when you turn on your television. The cliffhanger, however, isn't whether Netflix will pay, but what they will demand in exchange for their compliance. Behind this shift lies a mechanism designed to solve a psychological and economic crisis: the dilution of national identity in a sea of algorithmic content. Historically, traditional TV stations had to pay into a system that funded local creators, a cultural tax that Netflix avoided by claiming it was merely a software company. The hidden mechanic here is the discoverability algorithmic mandate. For the first time, a government is attempting to hard-code national priority into a private algorithm. It is an economic tug-of-war between the efficiency of global scaling and the friction of local regulation. Economically, Netflix relied on borderless arbitrage, producing content in low-cost regions and selling it everywhere with zero local overhead. That model is now broken. The psychology of the institution has shifted from offense to defense. By forcing these platforms to invest 5% of their gross Canadian revenue back into local production and news, the state is essentially seizing a portion of the platform's R&D budget. This creates a high-stakes friction. If Netflix complies, it sets a precedent that every other nation will follow, effectively balkanizing the streaming world. If they resist, they risk losing a high ARPU market that has been a cornerstone of their global stability. The stakes aren't just about movies. They are about who controls the narrative infrastructure of a nation. We are looking at a battle for the cognitive real estate of the population. When a platform's algorithm is designed solely for engagement, it naturally gravitates toward high-budget, homogenized global content, usually American-centric. This creates a psychological feedback loop where local stories, local news, and local nuances are gradually erased from the collective consciousness. The hidden mechanics of this new rule are designed to break that loop. It forces the algorithm to see local content not as a secondary tier of entertainment, but as a primary legal obligation. This is a massive technological challenge. How do you merge a global recommendation engine with a localized legal quota without breaking the user experience? The technical debt of this transition is enormous. Furthermore, the economic stakes involve the multiplier effect. For every dollar Netflix is now forced to spend locally, the government expects a return in jobs, infrastructure, and cultural retention. But here's the part nobody expected. The very rules meant to protect local creators might actually be the tool that creates a permanent, government-sanctioned monopoly for the biggest players. By raising the cost of entry through complex regulatory requirements, the state may be inadvertently making it impossible for a new Netflix to ever start. What is happening in Canada is not an isolated policy shift. It is the canary in the coal mine for the global digital economy. From the European Union to Australia, nations are observing this rollout as a blueprint for digital reciprocity. Historically, the world followed the American export model, where Silicon Valley provided the pipes and the world provided the data. But behavioral economics shows us that as markets mature, the novelty premium of global content fades, and consumers crave local relevance. We are seeing a return to 20th century protectionism, but fought with 21st century code. The power structure is tilting. In the past, a company like Netflix could threaten to leave a market to force a government's hand. Today, the saturation of the streaming market means Netflix needs Canada more than Canada needs Netflix. This is a classic principal-agent problem in economics, where the interests of the platform are now diametrically opposed to the interests of the sovereign state. European regulators are already drafting similar frameworks that would require cultural quotas and human-centric AI restrictions on home screens, effectively ending the era of the universal global homepage. This represents a total inversion of the Internet's original promise of a global village. Instead, we are entering an era of algorithmic sovereignty, where your location determines not just what you can watch, but what the machine is allowed to suggest to you. Think of it as a digital iron curtain. On one side, you have the platforms trying to maintain a unified global product. On the other, you have nations demanding cultural checkpoints. The historical parallel here is the rise of national radio and television in the early 20th century. Just as nations realized that control over the airwaves was a matter of national security and identity, they are now realizing that control over the stream is equally vital. The power dynamics have shifted from the innovator to the regulator. This creates a fragmented global market where a hit show in one country might be legally suppressed in another simply because it doesn't meet a specific points test for local content. This behavioral shift, moving from a global buffet to a locally curated menu, changes the way we relate to the world. We are no longer watching the same things at the same time. The water cooler effect is being localized, and in doing so, the global shared reality is splintering. It gets deeper because this isn't just about entertainment. It's a stress test for how much control a private algorithm is willing to surrender to a public entity before the system becomes unusable. The immediate fallout of this quiet rule change will be felt in the subscription ceiling. For the average family, this means the end of cheap, borderless access. As Netflix is forced to absorb the costs of local compliance, news fund contributions, and cultural taxes, those costs will inevitably be passed down to the consumer, likely as a regulatory surcharge or a base price hike. But the deeper impact, the one the media isn't discussing, is the homogenization paradox. By forcing platforms to fund specific types of local content defined by a rigid point system, we may see a decline in the very creative risk-taking that made streaming popular in the first place. When content is produced to satisfy a legal quota rather than an audience's desire, the quality often suffers. We are moving toward a curated, regulated digital experience that mirrors the rigid cable packages of the 1990s. The rule of three in market systems suggests that when regulation increases, only the largest entities survive, effectively killing off smaller, independent streaming alternatives that can't afford the legal compliance teams. This isn't just a Canadian story, it's a global trend toward fenced-in digital experiences. We are witnessing the death of the global feed. As these borders tighten, the content you see will no longer be determined by what is best, but by what is legally compliant in your specific GPS coordinates. This creates a filtered reality where the state and the platform are in a constant negotiation over your attention. For the worker in the creative industry, it might mean more jobs in the short term, but it also means working within a much more rigid and bureaucratic system. For the investor, it means the high-growth, hyperscale phase of streaming is officially over, replaced by a utility-style model of slow growth and high regulation. The media is focusing on the price of your monthly bill, but the real story is the loss of digital spontaneity. The internet is being carved into digital economic zones, each with its own taxes, its own filters, and its own forbidden content. This shift is the first domino in a much larger collapse of the open internet as we knew it in the 2010s. The quiet end of Netflix's old strategy is actually the loud beginning of a new, fractured world. Because while the world is focused on who pays for what on Netflix, the real transformation is already unfolding, quietly and in a place no one expects. The very architecture of how information itself is allowed to cross a border. If you think this is only about movies, you've missed the point entirely. The real shift is happening in the data layers beneath the surface, where the next global gatekeepers are already being chosen.